Welcome to today's enlightening video where I'm about to unveil a treasure trove of knowledge on how to legally navigate the tax landscape and reduce your tax liability to zero. But let me make one thing clear, this isn't just for the elite 1%. This is for the everyday folks, the 99% who deserve to keep more of their earnings. Get ready to explore 10 legitimate tax strategies that will change the way you view your finances forever. Our journey begins with a powerful tool, the Section 1202 gain exclusion. This isn't some secret society, it's a legitimate way to earn up to $10 million entirely tax-free when dealing with small business stock. Whether you're an investor or a small business owner, this is your chance to rewrite the tax rulebook. For investors, here's the playbook. Step 1. Invest in the stock of a qualifying small business. Step 2. Keep that investment in your back pocket for a minimum of 5 years. And Step 3. When the time comes to sell, rejoice in the fact that up to $10 million in gains will remain untouched by the tax man. Now, if you're a small business owner, listen closely. Step 1. Structure your business as a qualifying C corporation or LLC. Step 2. After 5 years, part ways with your business and witness the magic as up to $10 million in gains become a tax-free reality. The best part? You don't need a fortune to kickstart this journey, nor do you have to unravel complex offshore schemes. I've personally guided clients who began with modest investments in qualifying small businesses, watched their ventures flourish, and eventually sold for millions in gains, all without a dime paid in taxes. Here's the twist: many business owners and investors already qualify for this $10 million tax-free haven without even realizing it. Dive into U.S. Code Section 1202 to unlock your potential for financial liberation. Stay tuned as we delve deeper into the world of tax-saving strategies in the following sections. Don't forget to hit that like button, subscribe, and share this video with fellow financial enthusiasts who are ready to seize control of their financial destiny. Your journey to tax freedom starts here. Now, let's unlock the second gem in our treasure chest, the primary residence exclusion. If you own a home or plan to own one, this is a game changer. Get ready to learn how you can legally shield $250,000 of your home's profits from taxes, and if you're married and filing jointly, that figure jumps to an impressive $500,000. Here's how it all comes together. The day you sell your home, take a look back over the past 5 years. Did you reside in that house as your primary residence for a minimum of 24 months, which equals 2 years? If the answer is yes, then you qualify for the full $250,000 tax-free exclusion if you're single, or $500,000 if you're married and filing jointly. But here's the beauty of it, your 2-year qualifying period doesn't have to be continuous. Let's break it down with an example. Suppose you sold your home and look back 5 years. You discover that you lived in the house for 12 months initially, then moved out and rented it for 2 years. Afterward, you returned and resided in it for 6 months, only to move out and rent it for another year. Finally, you moved back in for 6 more months. In this scenario, you've met the 2-year primary residence requirement within the past 5 years and are eligible for the exclusion. Now, let's dive into the mechanics of the gain exclusion. Imagine you're single and you're entitled to exclude up to $250,000 in profits from the sale of your home. Let's say you purchased your home for $400,000, lived in it for at least 2 years, and sold it for $700,000. Your profit on the sale amounts to $300,000. Of that $300,000, $250,000 is completely tax-free. You'll only pay taxes on the remaining $50,000 of gain. Isn't that a sweet deal? But hold on, there are even more tax-saving strategies to explore. Now let's dive into our third treasure chest, the 0% long-term capital gains tax. If you're an investor in the stock market or crypto, this one's for you. Get ready to learn how to enjoy 100% tax-free capital gains. Here's the magic formula. If you buy a stock or crypto and hold onto it for more than 1 year, any profit you make from selling it will be 100% tax-free. Yes, you heard that right. But there are a few conditions to meet. If you're single and your annual income is approximately $60,000 or less, or if you're a head of household earning about $80,000 or less, or if you're married filing jointly and your combined income is around $120,000 or less, then congratulations, you're in the sweet spot. It's crucial to remember that these income thresholds account for the standard deduction and are adjusted for inflation annually. If you fall within this income range, prioritize long-term capital gains over short-term ones to ensure your gains remain 100% tax-free. Even if you typically earn more than the threshold, keep this golden rule in your back pocket. If you have a year where you fall into this income range, seize the opportunity to sell your investments and lock in those long-term capital gains tax-free. Let's clarify this with an example. Imagine you're married and filing jointly with the 0% tax rate applying to those making roughly $120,000 a year. Now, let's say your combined income is $80,000 annually. If you sell your stocks, making a $50,000 long-term capital gain, here's what happens. Your total income for the year increases from $80,000 to $130,000. That means $40,000 of those long-term capital gains remains tax-free, and the additional $10,000 of long-term capital gains will be taxed. Remember, this fantastic benefit applies to your federal income taxes with the IRS, and it's not necessarily applicable to your state income taxes. However, it's worth noting that some states don't charge state income taxes, which means you could potentially pay zero taxes. Welcome back to our quest for tax-free treasures. In this part, we're diving into the secrets of Roth retirement accounts and the age-old trick of depreciation from rental properties. Number 4 on our list is the incredible world of Roth retirement accounts. Any money you make within a Roth 401k or a Roth IRA is a treasure chest of 100% tax-free wealth. Let me share a mind-boggling example with you. Peter Thiel, the co-founder of PayPal, kickstarted his Roth IRA with just $2,000 and never added another dime. Fast forward about 20 years and it had magically grown to a staggering $5 billion, all of it 100% tax-free. Now, you don't have to aim for billions, but this remarkable story proves you can amass substantial wealth and pay zero taxes with Roth retirement accounts. Number 5 takes us to the age-old trick of depreciation from rental properties. This classic maneuver is like a hidden gem in the tax code. Here's how it plays out. Think about when you buy a car. As you drive it for thousands of miles, it undergoes normal wear and tear, gradually losing value. We're all familiar with that concept. But when it comes to taxes, depreciation becomes your best friend. You see, depreciation is considered an expense, and that means you get a tax write-off. Now, in the world of real estate, something intriguing happens. Typically, properties tend to appreciate in value over time. But according to the tax rules, properties depreciate in value, granting you a tax benefit. This is one of the reasons why billionaires dive into commercial real estate for those massive depreciation tax write-offs. But here's the exciting part. You don't need to be a billionaire to enjoy this. Even non-billionaires can harness the power of depreciation with rental properties. However, there are limitations to how much you can write off. But if you gather enough rental properties, you can classify yourself as a real estate professional, and that limitation vanishes into thin air. Becoming a real estate professional on your tax return is a breeze. You simply check the box. Of course, you need to have the evidence to back it up if ever audited. But rest assured, that's the worst-case scenario. Welcome to the penultimate segment of our tax-saving adventure. In this chapter, we'll delve into 2 more valuable strategies to keep your money where it belongs, right in your pocket. Strategy number 6 revolves around transforming losses from your side hustle into a potent tax deduction. If you ventured into a side gig and incurred losses, fear not. You can use those losses as a legitimate tax write-off to lower your tax bill. Here's how it works. Imagine you have a stable 9-to-5 job, but you decide to explore a new business venture. Perhaps you start your own YouTube channel. You invest in camera equipment, lighting, a computer, and various supplies amounting to $2,000. However, you later realize that being a content creator isn't your calling, and you decide to move on. In this scenario, you can use that $2,000 loss as a valid tax deduction. If your side hustle incurred a loss of $20,000 and your efforts were genuine, you can write off the full $20,000. Remember, authenticity is key. The loss must result from a bona fide attempt. Now, for number 7, we unveil a tax strategy that allows you to bypass Social Security and Medicare taxes, which is especially pertinent given the uncertainties surrounding the future of these programs. This strategy shines when you are self-employed. An S corporation is exempt from Social Security and Medicare taxes. If you find yourself in the realm of self-employment, I strongly recommend exploring the possibility of forming an S corporation. The process is relatively straightforward, and even if you currently operate as an LLC, C corporation, or within a partnership, transitioning to an S corporation is a viable option. I've got you covered with free resources to help you navigate the process seamlessly. Before we reach the grand finale of our tax-saving journey, make sure to like, subscribe, and hit that notification bell so you don't miss out on the ultimate revelation. Share this valuable knowledge with your fellow financial adventurers, and together we'll conquer the intricate terrain of tax efficiency. Welcome back to the grand finale of our tax-saving series. In this ultimate chapter, we're unveiling the last 3 strategies that can revolutionize your financial game plan. Number 8 on our list is the Health Savings Account, or HSA, a formidable tool for tax-advantaged growth. An HSA allows your money to flourish tax-free provided it's used for qualified medical expenses. By adhering to this rule, you can keep every dollar earned within the HSA shielded from taxation. Many individuals, like myself, contribute to an HSA annually, allowing it to accumulate tax-free growth. It's a strategic move that prepares you for unforeseen health expenses, ensuring you have a tax-efficient financial safety net. Education costs continue to soar, making strategy number 9, the 529 plan, a vital asset in your financial toolkit. Think of it as a retirement plan meticulously crafted for future educational expenses. While most people establish a 529 plan for their children, it's a flexible solution that can be tailored to other family members or even yourself. Here's the magic. Funds invested in a 529 plan grow tax-free, and when used for qualified education expenses like college tuition, you'll never owe taxes on those earnings. By initiating a 529 plan early, you can watch your contributions flourish over the years, poised to alleviate the financial burden of education. Last but not least, strategy number 10 opens the door to states with 0 income tax rates. If you find yourself burdened by high state income taxes in regions like California or New York where rates can exceed 10%, relocating to a state with no income tax may be an enticing option. Consider this: you already shoulder federal income taxes, Social Security taxes, Medicare taxes, sales tax, and a multitude of additional levies on utilities, cell phones, gasoline, and more. Currently, 9 states, Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming have no state income tax, offering you the allure of tax savings and financial freedom. These 10 strategies have the power to transform your financial landscape, allowing you to retain your hard-earned money and secure a prosperous future. Don't hesitate to ask any questions in the comments below, and if you haven't already, please subscribe to our channel for more invaluable financial insights. Thank you for your unwavering support, and here's to a brighter financial future. Take care.